Signs that cost pressures are easing boosts hopes of no more rate rises. An energy mega deal gets the green light from the regulator. And the Israeli Prime Minister promises a mass attack on Hamas. Welcome to Fear and Greed Business News, Australia's best business podcast. It is Wednesday, the 11th of October, 2023. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Now, Sean, after the show, you're speaking today with Luke Achterstraat, who is the CEO of COSBOA, the peak body for small businesses. There's plenty of acronyms there.
There are plenty of acronyms, plenty going on for small businesses at the moment. New rules around industrial relations, privacy laws, they're impacting small businesses. Also, what it's like on the ground. We've recently had an increase in the minimum wage. We've had an increase in the superannuation guarantee. All this makes life pretty tough for small businesses. So we decided to have a chat to Luke, who, of course, runs the peak body for small businesses, to find out what's going on. It's a very, very interesting chat in both policy sense, but also what is happening on Main Street.
Yeah, absolutely. It's well worth sticking around for. It's coming up later on. The main story this morning, though, Sean, National Australia Bank's monthly business survey has shown a welcome sign for inflation, with both labour and purchase price growth easing.
The survey is important because it tells us what's happening now in wages and prices, rather than the Bureau of Stats information, which tells us what has already been. National Australia Bank Chief Economist Alan Oster yesterday said the survey shows positive signs for inflation, with cost pressures easing. That's what we've been waiting for. Minimum wage hikes and volatile oil prices have impacted the reading, but overall, the trend is lower. That's good news because the Reserve Bank will keep interest rates at current levels or potentially lift them again if it doesn't think inflation is falling. While the third quarter official inflation stats aren't expected to be pretty, with energy, rents and a range of services likely to contribute to a jump in prices, the trend towards the end of the quarter was in the right direction, and that's what this business survey shows.
All right. Does that mean then, Sean, that we might not get any more rate rises? I'm trying to keep the hope out of my voice there.
Yeah, in short, yes, there are plenty of economists out there, including our own Stephen Koukoulas, who believe the Reserve Bank doesn't need to do any more. The central bank itself hinted at that last meeting. While it still has a bias towards tightening, it said it was waiting to see the full impact of the 4 percentage point hikes in rates in less than 18 months. Remember, it takes time for higher interest rates to flow through to the real economy. For example, only now are mortgage holders coming off fixed rate loans. Some economists even think that the Reserve Bank might have gone too far already. The information yesterday certainly adds to that argument. And I mean, we actually saw it in markets yesterday. Investors now start thinking that rates won't rise much.
It's a bit of a bumper day for data yesterday, wasn't it, Sean? Because the Westpac consumer sentiment figures were out as well. Is there any improvement in the mood of Australians?
Well, a little bit. The index rose, but we're still a pretty gloomy bunch. As Westpac senior economist Matthew Hassan said, optimism is in extremely short supply. Fears about inflation and interest rates pretty much are overwhelming everything else. We've got a solid jobs market. The survey suggested the outlook for family finances were pretty good. Everyone's still worried about inflation and rates though, Michael.
All right. Local markets, how did they perform yesterday?
All things considered, high oil prices, the crisis in the Middle East, economic uncertainty, it's a pretty good day. The S&P ASX 200 closed up 1%, pushing back above 7,000 points. It puts the market back to where it started the year. It was a broad-based rally with more than 80% of the top 200 stocks rising, led by the utility sector, tech stocks and telcos. The laggards were the financials. Taking a look at the largest companies, REA and Xero both jumped around 4%, while Telstra and Goodman Group were up more than 2%. Rio Tinto was one of the worst on the day, down nearly 1%. The lithium and gold miners did really well. Gold Digger, Chalice Mining and Core Lithium and Sayona Mining, both lithium plays, all finished up more than 7%.
I'm putting broad-based rally on my list of phrases that I basically play Aylmer bingo when we get sea of red or broad-based rally, any of those ones come up, which I know you've talked about before kind of when you're writing about markets, and you've been doing that for a long time, that these are the kind of go-to terms.
And what you're saying is please don't use them again?
No, please do. I'm aiming to get bingo here, Sean.
Oh, I see.
Try and use them all in one report, which is unlikely to have both a broad-based rally and a sea of red at the same time.
Yesterday was a broad-based rally. Today a sea of red. Oh, I might try that one.
Oh, please, that would just be the dream.
Mm.
Anyway, what is happening on international markets?
Well, there was some commentary out of the US about interest rates over the past 36 hours or so, which suggests maybe rates won't rise too much more in that economy either. High US bond yields are actually doing the job of slowing the economy. So the Fed may not have to take much more action on the official interest rate. Obviously, what's happening in the Middle East is a big part of deliberations. That's weighing on equity markets and the Aussie dollar. But just the fact that these Fed officials 24 hours ago talked about bond yields doing the job for interest rates, that sort of helped our market and the Aussie dollar. In fact, the Aussie dollar pushed above 64 US cents yesterday. Also, Michael, the price of gold is rising on the back of the war in the Middle East, with the precious metal jumping over the past few days at its fastest pace since May. The surge in oil prices in recent days has also held up.
And Sean, what's going on with Bitcoin at the moment?
Well, it's again becoming the dominant cryptocurrency in the market. The crypto market is valued at about 1.1 trillion US dollars. What's that? 1.7, 1.8 trillion Aussie dollars. It's up nearly 40% this year, according to Bloomberg. Bitcoin's share of that market is now about 48.5%, proportion last seen back in May 2021. In contrast, the market share of Ether, the number 2 crypto, is down about 6%. So speculators tend to dump the smaller tokens when risks are mounting. That's really good for Bitcoin. In terms of value, however, it was a very strong first half for Bitcoin. That's first half of 2023. It appreciated nearly 90%, but it's really come off since then. It's currently worth about $27,600 US dollars a unit.
All right, we will be back in a moment with the rest of the day's business news. Sean, big story. The competition regulator has given the green light to Canada's Brookfield and its US-based partner EIG's $19 billion bid for Origin Energy.
The Australian Competition and Consumer Commission approved the deal, saying the likely public benefits would outweigh the likely disadvantages. And that sent Origin's share price up more than 5% yesterday. ACCC Chair Gina Cass-Gottlieb said the acquisition will likely result in an accelerated rollout of renewable energy generation, which should lead to a more rapid reduction in Australia's greenhouse gas emissions. Energy Minister Chris Bowen welcomed the deal, saying he hoped it would bring additional investment to the nation's energy transition. Remember, Brookfield and its partner EIG, they've promised to spend between $20 and $30 billion in helping that transition. The approval came on the condition of tightened commitments to maintain competition, but it didn't insist on any divestments from Brookfield, which was a bit of a surprise.
So is it a done deal then?
Not quite. It still needs Foreign Investment Review Board approval, which is likely, and it needs 75% approval from Origin Energy shareholders. That might be a bit trickier, and indeed, maybe they'll ask for a bump in price. The $18.7 billion offer was worth $8.91 a share in March, split between Aussie dollars and US dollar payments. Now, the value of the bid, given the change in exchange rates, is now around $9.19 a share. So they should be happy with that, but you just never know. I think the deal will get done. I think this was the big impediment, but maybe shareholders will just ask for a little bit more.
So not quite over yet. So we will still be keeping an eye on this one.
Yeah, absolutely. It's such a big deal too.
Yeah, it certainly is. Now, rich lister Nick Politis is selling some of his privately owned car dealerships in Victoria to ASX-listed Eagers Automotive, in which he has a 28% stake.
Plenty of need for an independent expert in this one to make sure it's a fair price. Politis will receive $245 million from the sale, which includes 3 properties totaling more than 53,000 square metres of land. It includes Essendon BMW, Mercedes-Benz Brighton, dealerships in Toorak, Mulgrave and on the Mornington Peninsula. Now, 12 months ago, Eagers acquired Politis dealerships in the ACT for $193 million. So we now have Nick Politis earning $437 million in a little over 12 months from selling his car dealerships to the organisation in which he has a 28% stake.
Sean, we've talked for a while now about the boardroom battle at pubs and liquor outlet Endeavour Group. It's starting to get a bit ugly. The chairman taking on the bigger shareholder.
Yeah, so the shareholder, Bruce Matheson, owns 15% of the company. He's been firing away at the board around the group's performance and his view that costs are out of control. He also wants former Woolworths executive Bill Wavish to stand for election as a non-executive director. Yesterday, the chair of the company, Peter Hurl, hit back. He wrote to the company's 420,000 shareholders saying they needed to be wary of selective and incomplete information, adding that the board was acting in the interests of all shareholders, not just one. He said Bruce Matheson Group had used selective and incomplete information, which has the potential to confuse shareholders. I reckon we can call that a stoush, Michael, can't we?
Oh, yeah, that has passed the threshold for
That's a
stoush.
stoush. Endeavour, of course, operates 266 Dan Murphy stores, 1,435 BWS liquor stores, 354 hotels, and in those hotels are 12,700 poker machines.
Big numbers. Now, BHP boss Mike Henry has called for stronger policy settings to cement Australia's relationship with Japan, which is, of course, our second largest trading partner.
It is. So we sell about $55 billion worth of coal to Japan, $35 billion worth of natural gas, $9 billion of iron ore. We sell a lot of beef, aluminium, that sort of thing. We also buy a lot of cars from Japan. Henry yesterday told the Australia-Japan Business Partnership Conference that stronger policy settings are needed to ensure Japan keeps investing in Australia. He's not just talking about free trade agreements, he really wants tangible policy settings that make Australia a more attractive investment destination. Now, part of the troubles here really germinated late last year and then came to a head, I think it was December, when the Albanese government intervened into the gas market. That hurt some of the Japanese buyers, and that's really what Henry's getting at. He wants policy certainty so that doesn't happen.
This is an interesting one, Sean. Retailer Baby Bunting has warned that younger parents, especially millennials, are experiencing financial strains, and that then is hurting sales of things like prams and toys and clothing.
You're a younger parent. You're a millennial, aren't you?
Yes, I am. Thank you, Sean. I am indeed.
The story's all about you.
Yeah, well, I mean, to be fair, we bought a car seat about 2 months ago from Baby Bunting, and as we bought it, we walked out and we said, we reckon this will be the last time we ever set foot in Baby Bunting.
Isn't that exciting?
It actually is. It was quite a significant. I get kind of emotional at a lot of things, and that was an emotional moment.
Yeah,
it was a milestone.
I always think things with cars and kids. So the day that you don't have to put them in a baby seat, and then the day that they can put their seatbelt on themselves. It's all these little moments. I'm at the stage where they're learning to drive, so they can start driving themselves. That's like the end of the road. Pardon the pun.
Oh, well done.
Man, it's great though.
You are absolutely, and that moment when they can suddenly do up their own seatbelt, that was just extraordinary. All of a sudden, you're like, I feel liberated.
I opened one door to get in the car rather than three.
Yes. It is the dream.
Anyway, Baby Bunting, the new boss, Mark Tepperson, told shareholders at the group's annual general meeting yesterday that the trading environment is challenging and turnover at the group is falling. No one likes to hear that. He said 80% of new parents are millennials. There you go, Michael. And they're facing rising living costs, even if they don't have a mortgage. Baby Bunting said comparable store sales were down 8.5% year to date. Quite amazing. Now, shares did pretty well yesterday. It was up 3%. But they are down 25% this year.
Speaking of milestones, Sean, Virgin Australia has announced its first annual profit in 11 years.
Well done. Virgin, of course, is now owned by private equity group Bain Capital. Yesterday, it said it had made $129 million last financial year. That's after tax, on the back of a more than doubling of revenue to around $5 billion. Earnings before income and tax jumped to $439 million. Sounds a lot? Qantas, well, its underlying earnings last financial year was actually $2.47 billion, more than 5 times that. Airlines obviously haven't had a great time of it since COVID. In the 2022 fiscal year, Virgin lost $566 million. Great turnaround. Chief Executive Jane Herdlicker said the profit was an important milestone, but the group was only partway through its multi-year journey. Virgin's on-time performance has improved, though it is behind Qantas and Jetstar. It plans to spend about $110 million on cabin upgrades, including more seats on existing planes.
Superannuation giant UniSuper has teamed up with 2 European pension funds and bought timber plantations once owned by collapsed Tasmanian group Guns.
The consortium is considering building wind farms on the 173,000 hectares. It's bought off an investment company New Forests. That group, New Forests, acquired the Tasmanian land from Gunns back in 2013. Gunns milled trees mostly in northwest Tasmania. It was Australia's biggest exporter of wood chips. It was forced to stop cutting down native forests. Eventually went into administration about 10 years ago or thereabouts. The land purchased by UniSuper and the other members of the consortium is the biggest freehold land estate in Tasmania. It includes 89,000 hectares of trees that can be cut down for timber, but the rest of the land must be preserved for conservation.
10 years since Gunns. I remember it obviously at the time. It doesn't feel like 10 years has passed.
Yeah, it has, Michael. you millennials, you really do lose track of time.
Yeah, thanks, Sean. Now, international news, very serious one, Sean. The situation in the Middle East is deteriorating, with Israeli Prime Minister Benjamin Netanyahu instructing the country's defense forces to prepare for a mass offensive against Hamas at an intensity that's never been seen before.
He ordered a complete siege of the Gaza Strip and also said that the Israeli government will do everything it can for the hostages taken by Hamas in the Gaza. Meanwhile, Hamas has threatened to kill one civilian hostage and broadcast it if Israel attacks the Gaza without notice. The death toll on both sides continues to rise. Globally, there's been condemnation of Hamas's incursion into Israeli territory on the weekend. US President Joe Biden, French President Emmanuel Macron, the leaders of Germany, Italy, the United Kingdom, they all released a joint statement supporting Israel and its right to defend itself. Now, the US has warned Iran not to get involved in the crisis, and it has been confirmed that both US and Thai citizens were killed when Hamas attacked on the weekend. Away from the Middle East, there have been pro-Israel and pro-Palestine demonstrations around the world, including in Sydney on Monday night, where anti-Semitic chanting was heard and the Israeli flag was burnt. Politicians locally have condemned that behaviour. Prime Minister Anthony Albanese described some of the behaviour as horrific. He's right. There's also warnings, though, from some groups that these rallies will continue. So it's going to be, fingers crossed, they won't be violent, but it's just a little bit scary.
Yeah, it is a story that continues to evolve, and it is all very worrying, Sean. Now, up next is the Fear and Greed Daily Interview. You're speaking today with Luke Achterstraat, who is the CEO of COSBOA, the peak body for small businesses.
Yeah, it's all about the changes that affect small businesses. Some of those are policy, industrial relations reform, for example, privacy laws reforms. Others are much more practical, things like having to pay a higher minimum wage, superannuation guarantees, that type of thing, how that's affecting the sector and what it means for the economy.
It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Sean, you know what today is?
Wednesday.
Some people call it Wednesday. Some people like to call it How Do They Afford That Day? I'm in the latter camp on that one. There's a new episode of How Do They Afford That out today. And today, Canna and I are talking about the risks of investing when there is too much hype. And this kind of came out because of the Barbie movie and a bit of perhaps investor interest and fascination with Mattel, the company that makes Barbie dolls. And Canna had done a bit of a deep dive into the history of Mattel and was just talking about the risks of kind of buying into the hype and also of paying too much attention sometimes to what financial influencers online are saying. It's a really interesting conversation.
It sounds very interesting, actually.
It certainly is. I'm a little bit biased, but I think it is. It is available now wherever you listen to podcasts, and I'll put a link in today's show notes as well. Thank you, Sean.
Thank you, Michael.
It is Wednesday, the 11th of October, 2023. Make sure you're following the podcast and please join us online on LinkedIn and Instagram, X and Facebook. I'm Michael Thompson, and that was Fear and Greed Business News. Have a great day.